NBC TV18, celebrating 15 years of leadership.
Our top story tonight, India's factories seem to be back in business. Industrial output grows by 3.8% in November, beating expectations. Retail inflation accelerates, but at a slower than expected pace of 5%. Is a January rate cut possible?
21,000 MOUs and 2.5 lakh crore rupees of investments pledged at day 2 of Vibrant Gujarat. Finance Minister Arun Jaitley promises to ease the tax hassles faced by companies, hints that Chandigarh could become India's first smart city.
It is essential that Gujarat creates the appropriate policy environment and infrastructure to ensure it fosters a competitive domestic industry.
If he can deliver what he's promised in terms of ease of doing business and opening up more sectors, then clearly more FDI will come.
Global and domestic investors reaffirm their faith in investing in India, but add for more FDI to pour in, the government must start delivering on the promises being made.
Bulls prevail on the Wall Street once again. A late rally lifts Nifty above 8,300 in volatile trade. There's no dearth of optimism. Deutsche Bank expects Sensex to hit 33,000 by this year end.
Wall Street wobbled with the Dow marking triple-digit losses. Crude prices continue to crash. Brent falls below the $48 mark.
Anil Agarwal hints at a mega merger of Kane India, Hindustan Zinc and Sesa Sterlite to create a mammoth natural resources giant. All the stocks stumble in trade. Companies clarify there's no definite proposal on the cards as of now.
Once the swapping takes place, the exact quantity additional beyond the 5 megahertz or 2100 band would be known.
Some 3G spectrum will be up for grabs this fiscal, says Telecom Minister Ravi Shankar Prasad. Confirms that 5 megahertz of the 21 megahertz band will be sold in the upcoming February auctions.
Delhi will go to elections in a single phase on the 7th of February. Results will be announced on the 10th of February. Model Code of Conduct has come into effect.
Smarter and cheaper. Samsung lines up a slew of new phones, and no, they're not priced at 50,000 rupees. Stay tuned for Tech Toys on India Business Hour.
The precursor to the Oscars, Richard Linklater's Boyhood bags top honors at the annual Golden Globe Awards.
The Government of India is committed to support such initiatives by any state government.
I want to ensure that our economic relationship grows stronger in every respect.
I've been very encouraged by the recent proposal of a Constitution Amendment Bill for a goods and services tax, which offers an opportunity to make it substantially easier to do business in India.
We will invest over 100,000 crores in the next 12 to 18 months in Gujarat.
We have already built a solar plant in Gujarat and also begun to establish a significant wind energy footprint in the state.
We will be continuing to grow our businesses here. On the anvil, our brownfield expansions at our cement plant in Sevagram, the VSF plants at Vilayat and Bharuch. Our investments in these plants will be close to rupees 20,000 crores as we see it now.
Well, 2.5 lakh crore rupees and counting. Captains of India Inc. say they're ready to invest more as they promise big bucks at the second day of the Vibrant Gujarat Summit. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nanda. That's the figure that Anandibel Patel, the Chief Minister of Gujarat, has claimed as the quantum of investments pledged to the state. But as we've seen in the past with these MOUs, a lot of them look good as far as headlines are concerned, but very often don't always reflect in reality. But
in fact, picking up on that, that's one of our Twitter questions of the day. Has Vibrant Gujarat actually set the tone for a vibrant India? Is it all going to fall in place or not? Tweet right away, and you can, of course, use the hashtag IPH Live.
Well, it's not just vibrant Gujarat. Macroeconomic data pointing to vibrant days for the economy. Let's not get ahead of ourselves. Vibrant days, not just yet, but that is our top story tonight. The economy is on the mend, and here is proof. Industrial output in the month of November has expanded by 3.8%, beating expectations. This is a sharp rebound from the 4.3% contraction that we saw in October. Not just that, retail inflation has accelerated in December to 5%, but that is still below street expectations. Lata joins us now with the analysis. Lata, let's start with inflation first. What does the fine print say, and should we expect a rate cut in January? What's the street telling you?
Well, the CPI number is certainly better than expected. 5% compared to our poll of 5.2%. It may look worse than the November number, which was 4.38, but that's okay. That was because November inflation was very high in 2013. December, it had already softened. Even food inflation will look at, if you look at 4.78 for December 2014 versus 3% in November. Again, it looks higher only optically because last year November was a very ugly month, and December already things had started falling. If you looked at core inflation, that clearly is another matter of some satisfaction. The core is the non-food, non-fuel inflation, largely services, education, transportation, medicine. Those have gone up by 5.25% in the previous month. That is November, it was 5.5%. So genuinely a very good number. Will it be enough to require a out-of-turn rate cut? Well, I don't think left to itself the Reserve Bank wants to do it. If it does give an out-of-turn rate cut like later this week or something, then you are not going to get a February rate cut. So to mollify the government, it might do it 18 days earlier before the credit policy. But, it doesn't really make much of a difference whether that comes this week or whether it comes in February. Maybe that there are very good chances of a 25 basis cut over the next month or so. More than that, we cannot say at this point in time.
Well, an out-of-turn rate cut likely in January or not, that is the big question at this point in time. But as Lata was pointing out, does it really matter whether it comes 18 days in advance or it comes in February along with the credit policy? Maybe to the government it will. But Lata, what about the industrial production number? 3.8% growth, that certainly is good news, especially if you compare it to the negative 4.8% that we saw as far as the last IIP print was concerned. But to put it into perspective, the previous data, we had a long list of holidays to contend with, and that had impacted that number.
Well, at least the despondency of a minus 4.2 of October is removed. It also proves the point that October was an outlier month because we had about 10 public holidays, Gandhiji and Dasera and Diwali and elections all contributing to it. So it's just a mean reversion, as it were. But the mean itself is not very good. This 3.8% is also looking good because November of 2013 was not a particularly good month. It was a bad base, which is why November of 2014 looks good. Manufacturing, for instance, is a fairly decent 3% compared to a minus 7% in October. Okay, but if you looked at the index itself, it is just what we did in previous months. So it's not as if manufacturing has picked up. The unusual negativity of October has gone away. It's positive only in electricity, which has grown by 10%. Last month it grew by 13%. So electricity is clearly a very good performer. Likewise, mining, growing at 3.4% is clearly better than most of the previous months, which means some more iron ore mines or coal mines are getting activated. Definitely in mining and electricity, there is positivity. In manufacturing, really not so much. Consumer goods is clearly driving home the point. It's still minus 2.2. Consumer durables is minus 14%. So this is not great news. The negativity of October is over, but otherwise, this is not a growth story at all.
Consumer sentiments are a little bit weak, so it may take a couple of months for the to be on the positive. But on the whole, we are positive that the December IIP numbers would be strong because this is generally the month when the IIP growth that is strongest, and March is also another month. So if we just take into account the January and February, which has also a weak, which is a negative base. So from that point of view, the next couple of months could bring some amount of cheer on the IIP front.
We also have a view that the February policy could see a rate cut. But I would put a caveat that out of all the preconditions that the RBI governor had laid down in the last policy, one of them, the fiscal, looks a bit iffy till date. I'm not so much bothered about whether the FY15 target will be met or not, but I'm more concerned about how the FY16 budget is going to look like. There are some talks about kind of targeted public investment program to be implemented through the budget, even at the cost of not doing the fiscal consolidation. Whether RBI would want more clarity on these front is something that we need to see.
So experts there reacting on the IIP and CPI data that had come out. Now let's tell you what happened on the last day. And of course, all of the economic data had come out once markets are shut for trade. Volatility continued to rule the roost this Monday. Markets clocked gains for the third straight session thanks to a late recovery. Nifty reclaimed the 8,300 mark. Losses were paired in the last 1 hour of trade. The Sensex gained over 100 points to breach the 27,500 mark. And the recent blip has done nothing to affect investor sentiment. For instance, Deutsche Bank expects Sensex to hit 33,000 by the end of this year. Listen in.
If you look at the emerging markets world, India looks very differentiated at this point in time. I think most of our economic metrics are looking much better, much stronger. The fact that, commodity prices have come off, crude has come off, I think is a big positive as far as India is concerned. And then, of course, don't forget that, after 3 decades, we have a majority government at the center with a very decisive leader. And I think that's what, investors were looking at. So my own sense is that, regardless of what happens, and even if there was, a reversal of flows from emerging markets, India would be spared or definitely treated very favorably.
You had $16 billion of FI investments last year, which was actually lower than the FI investment in the previous year. So despite the big BJP victory, despite a very pro-business government, we actually had lower FI investment last year, and yet the market went up. That's one of the reasons was because of the very strong flows into the domestic equity mutual funds, which we think is a trend which will pick up even further pace in the coming year, 2015. We think the outlook for India is actually very, very positive. As we've mentioned in our strategy report, we have a Sensex target of 33,000. This is up roughly about a 20% upside from the current levels.
So Deutsche Bank continues to be bullish on India's Sensex target of 33,000 for 2015. But let's get down to talking about what everybody's talking about. It is the second day of the Vibrant Gujarat Summit. 21,000 MOUs have been inked so far, with investors pledging 2.5 lakh crore rupees, according to the Chief Minister. Now, after the Prime Minister yesterday, it was the turn of the Finance Minister to hard sell the India story. Addressing business leaders, the Finance Minister has hinted that Chandigarh will be India's first smart city. He's also promised that the goods and services tax will be rolled out by next year.
An aggressive tax regime in which investors had a lot of grievances. And when I sit with my team of civil servants preparing for the next union budget, not one of those identified cases has brought me any relief. It's only brought a bad name to investment and a bad name to India. And therefore we are seized of the matter, and putting a quietus to most of those disputes is a clear roadmap that this government has chalked for itself. The first Indian smart city to be created probably could be Chandigarh. There are now satellite cities around Chandigarh which are being created. Noida and Greater Noida on the outskirts of Delhi. New Raipur in Chhattisgarh. Now these are recent experiments we've made, and good experiments we've made. And therefore, so that foreign capital, international capital is available to them, we've opened up in that sector, we've liberalized in that sector. So even 2-tier and 3-tier cities are allowed.
Finance Minister's pitch to investors. Now, putting his inimitable salesmanship to work, Prime Minister Narendra Modi used the Vibrant Gujarat Summit as a platform to rope in global investments for the country. Enthused by the Prime Minister's sales pitch and the potential of the Indian market, overseas investors and officials of various foreign governments have reaffirmed their faith and commitment to the country. Here's that story.
Our dreams can become the seeds of your growth. Our aspirations can propel your ambitions. Friends, on behalf of the government, let me give an assurance. We assure you that we will be available to hold your hands whenever you need us.
Prime Minister Narendra Modi's clarion call to Make in India struck the right chord with foreign statesmen, diplomats and global CEOs at the ongoing Vibrant Gujarat Summit in Ahmedabad.
We share Prime Minister Modi's goal of increasing our country's annual trade fivefold in the years ahead, and we want to expand our commercial ties and change the way our businesses talk with one another.
This event, Vibrant Gujarat, goes far beyond return on investment. You are here not only to build industrial strength, but to talk about sustainable, inclusive solutions.
We project that India will be a bright spot in an otherwise mediocre global economic outlook. Its economy, according to our projections, is expected to grow 6.4% this year and even faster in 2016.
Trade ministers from the west to the east have expressed their willingness to deepen bilateral ties.
We want to build on this partnership. Yesterday we launched the Great Collaboration Campaign. That's the UK responding to Prime Minister Modi's call to make it in India. The UK and India make great things together.
As an old friend and partner of India, Singapore is excited by Prime Minister Modi's vision for India and the way he has energized the government and people of India to take decisive steps to realize that vision. And this includes Make in India, to transform India into a global manufacturing hub.
The private sector is looking to India for real opportunities, and the free trade agreement that we're currently negotiating with the Indian government will open up many doors.
CEOs of global corporations have also reiterated their financial commitment to India.
The next 2 years are quite crucial for us because we hope to expand our business substantially. We will apply for a subsidiary license in the near future. On the back of that, we hope to be able to grow a few more branches, build out into the SME space, and potentially leveraging some of the digital channels, build out even into the retail banking space.
We have two very large potential projects here in India. One in Odisha state in iron ore, a potential $2 billion project, but more importantly, a diamond project in Madhya Pradesh, which will add 30,000 jobs in the diamond cutting industry here in Gujarat.
Over the past 3 years, Emerson has invested over $400 million in our operations and our engineering facilities across India. Our aspiration is to position Emerson as a manufacturing leader both for India, for exports to the Middle East and Africa over the next couple decades.
The government's pitch to simplify the tax structure and improve the ease of doing business have attracted positive attention. All eyes are now on the budget and the next session of the parliament to see if the government can close the loops on the unfinished reform agenda. Bureau Report.
Well, not just global investors, business confidence within India Inc. also at a high. The threat of flight of domestic capital has been put to rest, and India Inc. says it's ready to invest again.
In terms of its business environment, Gujarat indeed stands out. I would encourage each and every investor to follow our path and invest in Gujarat.
I reaffirm our commitment to the sustained growth of the state of Gujarat and its people.
The investment paralysis is over, or so it seems, if you go by the promises made by Indian business leaders on the Vibrant Gujarat stage. The largest investment promises come from Reliance Industries, with plans to invest 1 lakh crore in Gujarat in the next 12 to 18 months. Aditya Birla Group plans to invest 20,000 crore in the state, while Videocon has committed an investment of 2,000 crore rupees to set up a fiberglass unit in the state. Renewable energy and defense were sectors that saw greater interest from investors, with Adani Enterprises signing an MOU with Australia's Woodside Energy for a joint venture for LNG sourcing, marketing, E&P and research and development. Adani Enterprises also signed MOU with Sun Edison to set up solar manufacturing facility worth 25,000 crore, a facility that will create 20,000 jobs and will come up over 3 years. Adani also plans to invest an additional 20,000 crore rupees in the port sector in the next 5 years. Wind turbine maker Suzlon announced investments worth 24,000 crore on energy projects, generating 3,000 megawatt of energy in Gujarat over next 5 years. Energy major Kalyani Group signed defense MOUs worth 600 crore with the Gujarat government.
the Tata Group companies invest significantly in the state in the areas of water management, education, skills development, livelihood generation, and natural resource conservation.
We are working towards creating energy security, helping to brighten the future for millions of our Indians. We'll be focusing on renewable and clean energy generation in India.
Both the Prime Minister and the Finance Minister's assurances of easing tax-related concerns and improving the ease of doing business has given confidence to policymakers and industry.
Investors have been looking at India very differently for some time now, and that's reflected in the fact that foreign inflows have really been have surged over the last 2 quarters. Really,
let me echo the confidence and significant enthusiasm which India is now associated with in terms of its own investment climate. I think there's been a sea change in the global perception of what's happening in India.
While assurances work to lift sentiments, investors are now closely awaiting the new government's first full budget to see if these assurances will be borne out by policy. Bureau Report, CNBC TV 18.
Well, speaking of investments, Spectrum Auction, Digital India, the offices of the IT and Telecom Minister have been buzzing with action. From Mark Zuckerberg to Satya Nadella to Jeff Bezos to top global CEOs, they've all been lining up at the doors of Ravi Shankar Prasad, the IT and Telecom Minister. He did manage to speak with us a short while ago about issues concerning his ministries, and I started off by asking him about the status of the Digital India dream and if the government has been successful in wooing global investors. Listen in.
First of all, you need to understand, when we talk of Digital India, there is a whole architecture which is a game-changing exercise to bridge the gap between digital haves and digital have-nots. We have got 900 million, 90 crore mobile phone in India. We have got nearly 300 million internet connectivity in India by the year end last year, 2014. Now we have a great technological base, the innovative heights which the mobile connectivity, IT enabled services have done in India. What was more important was to make it clear, the architecture more extensive, and from there came the Digital India program, which has got basically 3-4 substances in terms. National Optical Fiber Network establishment in nearly 250,000 Gram Panchayats of India within a defined 3-year period. I am going to inaugurate one district, Idukki, tomorrow in Kerala. The whole district have become now National Optical Fiber Network connected. Then e-governance, based upon that e-health, e-education, e-commerce, digital literacy extensively being extended, encouraged, which we call Disha, the program is. Most important, electronic manufacturing. We consume electronic goods worth nearly $100 billion every year, $80 to $100 billion, which may become $400 billion by 2020. From smartphones to LED lights to SIM card, smart card, set-top boxes. All this from where the Make in India program has emerged. We have given incentives. 9 MSIPs program in electronic clusters have been laid out in different parts of India. The CMs have come on board. And just to inform you, in electronic manufacturing, we have already received proposals worth about 19,000 crores. And about 5,000 crores we have already okayed. Others are in the pipeline. What is the incentive? If a state government gives 50 acres of land, we give them 50 crores straight away. If a manufacturer invests 100 rupees, we give them 25 rupees. This is in addition to state incentives which are available. Therefore, it is a very good ecosystem architecture being thought of, and we are quite sure of establishing it, implementing it within time frame.
All right, so you're saying that 19,000 crore rupees by way of investments being committed to the government's electronic manufacturing policy. But let me move away from that and talk to you about the most important issue at this point in time, and that's linked with the government's ambitions for Digital India. We're talking about the spectrum auction. The government has said that it intends to auction 21 megahertz simultaneously, along with the 900 and the 1800 megahertz in the upcoming auction. How feasible is this going to be? And there is still no clarity on the quantum of the 21 megahertz spectrum that will be auctioned. What can we expect as far as 3G spectrum is concerned, sir?
Well, I think NIA is out. Anyone can go and see it. There is no confusion. Even the cabinet decision was no confusion. 800 megahertz, 900 megahertz, 1800 megahertz, and 5 megahertz of 2100 band. The 5 megahertz of the 2100 band was lingering decision between two ministries for the last 8 years. Don't forget it. We have decided, resolved in 6 months' time. I must thank the Minister for Defence, Mr. Parikar. As far as the other is concerned, about 15 megahertz, much is written about. I've already spoken in one of my interviews, and let me repeat. The defence band is to be identified, which we have resolved to identify in 45 days. Thereafter, swapping is to take place between the telecom band and the defence band. Once the swapping takes place, the exact quantity additional beyond the 5 megahertz or 2100 band would be known. Once that becomes known, we'll again go for the auction. Is the auction in February, Shireen, the last auction?
You're making an important statement, sir. You said that within 45 days you will be able to identify the spectrum that needs to be swapped. But by when will we know about the final swapping arrangement between the Defence Ministry and the Department of Telecom? Because that is what investors are concerned about, because that will give them a sense of the kind of spectrum availability in that band, sir.
First of all, let me clarify, there is no lack of clarity. 5 megahertz 2100 band is neatly available, pending for the last so many years, which we have resolved. You are talking of the 15 megahertz additional. Then let me ask a counter question to you, Shireen. Do you mean that I should detain all the auction, regardless of spectrum and license expiring this year, till there is exact swapping takes place? Exact swapping will take some time. I told you it's a technical exercise. If certain defence bands are within the telecom band, certain telecom bands are within the defence band, once the band has been demarcated, the exact swapping will take place, giving exact quantity of 15 megahertz or beyond or little less. We'll also do that. After all, excuse me, auction is an animal exercise. Therefore, merely because the swapping is in the process, even though there is agreement in principle, you please await and say there is lack of clarity. I see it as a kind of sinister campaign, which I don't accept. There is clarity on 800, clarity on 900, clarity on 1800, and clarity on 5 megahertz of 2100 band of the defence band. Complete clarity.
Well, the telecom companies won't agree with the sinister campaign that you talk about, but let me ask you about pricing, sir, because DOT's internal panel has suggested a 43% higher reserve price of spectrum versus the regulator's recommendation. Clearly, the government feels confident about overruling the regulator and putting in place a higher price. Then why this back and forth, sir? Why send the matter now back to the regulator?
First of all, there is a legal requirement, Nidhi. You are a very seasoned journalist, you need to know it. If the Telecom Commission differs with the TRAI recommendation, there is a mandate in law to seek a reconsideration. Now, before that, you want Ravi Shankar Prasad, the Telecom Minister, to make his own comment on a public television. Will it be fair? It is a legal process. Await that.
Well, that's the Telecom Minister Ravi Shankar Prasad on auctions and more. You can watch that conversation on CNBC TV 18. For now, from all of us here, goodbye. Many thanks for watching.
CNBC TV 18, celebrating 15 years of leadership.